Hello everyone, good morning and welcome to Trading the European Open live here at the LiveTradeRoom. So today now is Wednesday the 12th of September, and what we're looking to do is have a significant understanding of price action. So we're technical traders, and what we look to do is to cut our losers short when we have difficult trading conditions, and we really look to let our winners run when the markets start to open up. Now, yesterday was a very, very interesting trading day, not from a profitable perspective, but from a price action perspective. It was very, very choppy trading conditions yesterday. So we will go through the charts very shortly to explain what we mean. There's a lot of movements in a number of markets. Didn't make an awful lot of sense, to be fair, but these markets don't need to make sense. They need to conduct themselves as they want to. Of course, we're in no position to dictate with these markets, but what we look to do is to navigate through them as best we can. So we have a process for identifying high probability trading opportunities. So we'll identify some opportunities today. Now then our focus starts to shift to our ability to execute trades. So we'll create a trade plan up on screen and you'll be able to see the trades we're looking at and how we go about executing with consistency and discipline. Then once we're in a trade, we then focus our attentions on managing that trade effectively, looking to mitigate risk, looking to book in profit, and like we said, look to cut those losers short. Now yesterday was the perfect example of our ability to manage risk effectively. We've got very little follow through on any of the markets we were looking to trade, and it just became one of those trading days yesterday, which every trader experiences from time to time. But it just shows the importance of effective risk management. So hopefully there's been a benefit in there nonetheless. All with one aim, and that's to book in profit on a consistent basis. So without further ado then, if I could draw your attention to the risk warning. Please do familiarize yourselves with the risk warning currently up on screen. Okay, so before we begin then, let's start with a quick review of potential market moving news. So for this, we shall bring up Forex Factory, just up onto the screen. And as we can see for the morning session, we don't really have a lot of significant price or news data being released over the course of the morning session. So we're probably going to be in for a bit of a light morning. As we look to the afternoon, we do have a PPI number. It's a monthly figure, and crude oil inventories as well at 3:30. So we shall absolutely see what these markets can bring. So there's an air of skepticism, elements of fear in these markets. You can tell that by the way that these markets are moving without any significant direction. And to explain what happened yesterday, let's have a look at the trading charts. We can start as we always do with the dollar, with the euro dollar. So we had a significant move to the upside yesterday, above Monday's high. Didn't really give us a fantastic opportunity from a high probability perspective, but it did squeeze up quite high. And then as you can see, we've had a significant turnaround in yesterday's trading and then started to get bullish again. So effectively no major movement in yesterday's market. Now today we're experiencing a little bit of a sell-off to the downside. Now this is more in keeping with the direction in which we want to trade this market. We weren't really interested in buying it yesterday. It didn't represent a high probability trading opportunity in the euro dollar. But we can keep a close eye on this, and a break below the 1565 could give us an opportunity to sell this market and push it down to the 1529 level just at these lows. So potentially a trade in the pipeline there if we get to see some continued dollar strength creep in. Now this was the market that we were looking to trade yesterday above the 3050 level, and we got a bounce. We got a 37 pip bounce to the upside, which was good for a period. But I want to show you the the volatility in yesterday's market. If I can just zoom in. So we had this kind of move. So we had the move above the 30-50 level, got into it around this sort of price here, had a really strong impulse move to the upside. Again, for no obvious reason. There's connections to the Brexit negotiations. The market pulled back considerably to a level of support and then attempted to make a new high and failed. So once that happened, we were pleased to be out of this trade, and then the market continued to tank the best part of 100 pips in about 1 minute. Since then, we bounced back to the upside and then slowly rolled over again to the downside over the remaining few hours. Since these lows down here at the 29.65, and don't forget we had a high of the 30.87, so we're talking about a significant move in this market on a shorter term time frame, which has been moving from high to low and then sort of back to the middle. So really choppy trading conditions, and now it looks like we're rolling over to the downside once more. So when we look at this daily time frame, ironically now, you see what we were trading above the 30.50 in terms of explaining the trade that we were looking to take was a structural failure above that level. So I'm just going to share that with you now. So we talk about structures in these markets and we talk about important levels. And if a market breaks important levels, and that would be this level in here. If this market, the pound dollar, bounces off a low, creates a high in the market, attempts to make a new low and fails, this is now a lower high from a technical perspective. So if we get that break to the upside on that level, from a consistency perspective, we would want to be buying this market perhaps 90 times out of 100, apart from situations which we experienced yesterday. So we saw the move above that level yesterday in a relatively short period of time, but then we also saw a significant reversal equally in a very, very short period of time. And look at the level that this level that yesterday's low bounced off. It bounced off this descending level, pointing to the downside, and we got a little bit of a strong reversal actually, and it ended up as effectively a doji candlestick. So let me just slide that across. So again, from a probability perspective, we're needing to just exercise a little bit of patience now, really. What this has the potential to turn into would be a double top, which would be quite supportive actually to the downside at this point. So this could be the beginning of the next leg to the downside. There's a lot of rhetoric about the dollar, the dollar strength story sort of waning quite a lot, and more significant moves against the US dollar are in the pipeline. But technically speaking, we don't really see that to any great extent. Yes, we have pulled back considerably. And we are attempting to make another pullback to the upside, which ultimately has failed. So taking this market, and if we certainly break the 28.08 level, then this market is definitely back onto the downside. We're just in this little period at the moment where we need to probably exercise a little bit of caution on this trade. So this is slowly squeezing lower. So that's the pound dollar. Again, it doesn't really represent a fantastic high probability trading opportunity this morning. Another market that's a little bit confused is the dollar yen. What we are is effectively moving sideways since mid July. So between that price and that price, we are effectively moving sideways. Yes, we have had a little break lower, but effectively we've been moving sideways not been that much movement between let's say the 110.50 and the 111.80. So 130 pip range over the last 2 months effectively. We're in a sideways moving market, so it's important we identify the market conditions and really need an explosive move to the upside or to the downside for us to consider the pound yen. Again, you can see that the dollar has sold off a little bit about with the against the Swiss franc. Now this again, from a technical perspective, would constitute potentially a double bottom. So the level that becomes really interesting for us now is this level in here, the 97.66. Now there is significant resistance around the 97.98 on a 9800 level, and I'll show you that level in more detail. So it coincides with these lows in here. So yes, a trade may exist to the upside, but to be fair, we've got some decent resistance about 30 pips above that level, so just be careful with that market as well. A number of these markets are just requiring us to be a little bit more patient with these markets right now, and be careful with them. Don't necessarily be jumping into them to any great extent. Really strong sell-off yesterday in the end, largely off the back of the move we've seen in the crude oil markets. So really strong extended move to the downside yesterday. And again, we're kind of bouncing off this low in here. So this is absolutely the level at which we'd expect a little bit of support coming into this market. So again, today's trading a little bit indecisive. Certainly a break below the 30.44 would give us a higher probability opportunity, because this is the weekly low. And again, yesterday's candlestick bounced almost exactly off the weekly low by about 1.5 pips. So that's effectively the same price. And today now, we've not really done an awful lot, as you can see. We've just hung around these lows. So again, another one to watch, but we are getting mixed signals with the US dollar as well, which just makes the trading conditions a little bit more difficult. We're trading sideways effectively in the Aussie. Now the New Zealand dollar is potentially looking like it's interested in squeezing lower. So this would represent a high probability to the downside. And we do have further scope to the downside that this market could move. I'll just take a note of this level down here. So we can see the price, the next level of support would be the 64.28. 64.28, and we're currently at the 65.12 area. So it does represent an opportunity to the downside. So we'll take a look at this. The problem we have with the New Zealand dollar is it doesn't move that quickly. So we may very well be in a situation where we're needing to be really patient and just watch a market that's not really moving a great deal. But we will identify this market as a potential opportunity. We can look at the Aussie dollar if we do get a break of these lows. So we'll probably pigeonhole these together and just see how these markets are performing around these prices. So we'll come back to those shortly. A horrible day in the euro dollar yesterday, or the euro pound should I say yesterday. A significant day of indecision like we've seen across many of the markets yesterday. Now the euro strengthened against the yen and is now just sort of coming off just a little bit. So again, from a technical perspective, there is this downward sort of trend. This is the direction in which we'd prefer, at least short term, to capitalize on a little bit of a move lower. So that's why yesterday's trade didn't really fit with our analysis in terms of we're not wanting to buy from this level, but we are potentially interested in selling from it. So there is this downward trend, certainly since the beginning of the year, and it's in keeping with that, but we do appreciate it's kind of going through a bit of a strange phase right now. So unless we get the clarity, maybe it's wiser for us to just step back a little bit. Now, similar situation to the pound dollar. Of course, we want to be selling this market. There's opportunities at every stage to sell this market. Some of them are better than others, and we're getting another opportunity now. So actually selling the pound yen, if some continued strength comes into the dollar against the pound, then we could get some opportunities in these markets. And both of these markets effectively yesterday reversed off structural failures to the upside. So we got an initial break, and then we got a really strong reversal off these levels. So I think we will continue to look at the pound pairs, and we'll also look at the dollar pairs against the New Zealand and the Aussie. So we might alternate between the two. So I shall come back to these 4 trades very, very shortly. Just want to discuss a few happenings in some other markets before we come back to these. And we'll start with the gold market. So we're still looking to sell this market even on a daily time frame, and we are still below our entry, so we're in a little bit of profit. But we do want to clear this little sort of confused area here, and that's what this area effectively represents. So I want to take note of this low. So what we have in and around this little range here is obviously yesterday's low, but also our weekly low, which is even more important. And again, we got initially the break to the downside yesterday and a strong reversal. So there was nothing overly wrong with our analysis yesterday with any of the trades we've taken. What we experienced was markets that didn't want to follow through. So there was a lot of rejection trades yesterday in a lot of significant moves, let's say. So again, it's unusual you get so many, especially what was happening in the British pound. That was particularly unusual. You wouldn't see price action like that often. Makes it very, very difficult for traders to get to grips with the market. Luckily, we really mitigated the risk and reduced our exposure before those markets tanked in a very, very short period of time. So again, it's the focus and the practice on risk management that can protect your capital during very choppy, erratic, volatile markets that don't really stack up, don't make much sense. So for that reason, yesterday we kind of ended up backing off the pound. It wasn't something we were going to keep pursuing, because as the picture changed, so did our opinion of that trade. And that's part and parcel of trading these markets. Now, we do like this market, but we don't really want to be selling it going into this level of support. So we might need to be a little bit patient with the gold market for now. Now, the biggest move, and it was a bit of a late day move, was in the US oil market. Didn't really do much for most of the day, and then we saw a really nice strong move to the upside. So the level that's interesting for us to the upside in this market would effectively be a close above the 70.58. So we're not too far away from it. The reason why we've got a bit of indecision with this market is, from a technical perspective, yes, we are in an uptrend. Yes, we would like to go with that trend to the upside. We've just got price action that's given us slightly mixed signals as we look at these charts. So what we have is a high and a low, and so let me just talk you through this sort of bit of price action. Is that we have this price bouncing between these levels, which is obviously in a downtrend. So at this point, we're firmly in the downtrend. Now, we've had a really strong pullback So you'd expect some resistance to kick into this at a little bit of an earlier phase. But we had a really strong pullback from the $64.50 level to the $71.50. So that's a significant $6 move. And what we've seen since this high here at the 71.64 is an attempt for this market to move lower. So what we would like to see is this market continue to break this level, and there's your high probability continuation to the downside. But what we see is a bit of a floor being created at this level with the potential for this market to push higher. We're now back inside our ascending line, and it looks like we're heading to the upside. However, a break of this level in here is a continuation of the trend to the upside. So there's a high probability trade to the upside. Yes, there might be opportunities above the 70.50, but if we're talking about the high probability side to this trade, we're looking at the 71.64, because then that just means continuation, potentially pushing up, certainly up to these highs up here, which would be a decent trade. It would be a decent $3 move. And to just clarify, our high probability trade to the upside is the 71.64, and our high probability trade to the downside is the 64.56. Now, of course, there is a significant range between this high and low. We can't really do an awful lot about that. Sometimes we can get this set up in kind of half the distance, where we can make really nice, concise decisions off the back of the price action. But this is spread out over a slightly larger range than we would anticipate. So purely from a technical perspective, these are your high probability trades to the upside and to the downside. And of course, if I take this away, we're currently in between this high and this low. So really, we need to kind of wait for this market to get to this level, or to roll over and just start moving, obviously, to the downside. So we're currently in this little sort of gap at the moment where there's a lot of indecision, like there is in many of the markets we're currently trading, to be fair. A lot of indecision, and although yesterday we got a bullish trade, it didn't really represent a great opportunity for us, because again, like many of these markets, we're kind of in the same kind of bit of price action range again for 2 months, just moving sideways. Okay, we had a little blip to the downside which reversed pretty quickly, but apart from that, as you can see, we're effectively moving sideways. So your assessment of directional bias is really, really important. Yes, we do have the trend pushing to the upside, but really what we're in is a sideways moving market. So it is consolidating, likely to get a strong move at some point. The recent rejection to the upside needs to be noted, because it does mean that there is sellers in this market looking to drive this price lower. So we'll wait and see how this market unfolds. Slightly different picture as we look at the Brent. We've got kind of a triple top up here. Again, the levels of interest for us would be above the 79.84 to the upside and the 75.39 to the downside. So a bit of a sort of odd bit of price action as things currently stand, but these markets will iron themselves out. They'll give us those really clean-cut opportunities if and when. The S&P 500, these were looking quite bearish yesterday for a period before turning around in the latter part, certainly of the European trading day, and we started to see some strength come into that beyond that point, and we're currently just floating up with these highs. Again, the trend is very much to the upside, so we're likely to see a little bit of continuation, and that would be just above the 28.91 level to the upside. So we will keep a close eye on this. We had all these markets turning to the downside. We even had the Dow Jones trading below the 25.805 level, which for us would represent a good opportunity to sell this market. But as you can see, again, we saw a rejection in the Dow Jones. So just multiple rejections across the board yesterday in nearly every market that moved. Very rarely do you get situations like that, but yesterday we did experience situations like that. Again, some strength started to come into the Nasdaq market, currently trading at those highs. Now, no significant strength as far as the UK 100 concerned. We had a bit of a choppy day yesterday, as you can see from the FTSE trading day, potentially looking to extend its low, and then reversed off those lows and actually became quite strong. And similar situation with the Euro stocks, was looking very, very bearish for most of the day. Eventually turned around, started to look quite strong, and today we haven't really seen that much follow through, but there is a little bit of resistance in and around this level in here. So will we see this market attack the weekly low once more? Obviously very possible. We'll have to wait and see on that one. So that's the Euro stocks. So as far as the trade view is concerned, we're a little bit limited. And we're going to look at a few dollar related trades. So we've got a clearly defined bounce off this level in here. You can see how this price interacts. So let's go ahead and look at the Nasdaq and see if we get a little bit of an impulse move to the upside. So we'll have a look at this. So this is effectively our trade plan for the day, and we'll look at this at the bottom right hand corner of the screen. So we'll come back and look at this in a bit more detail shortly. So really, I suppose the easiest trade is probably selling these highs up here. But you see, we're off the back of quite a bullish day yesterday. It did bounce off the same level, the 79.46. And it is a triple top with a slightly sort of bearish outlook. We're kind of going against yesterday's move to the upside, but we didn't break above the 79.46. So we'll have a look at this market as well and see if we get any sort of continuation in this market. Let's have a look at this on the top right hand corner. So our trade plan will be revealed now very, very shortly. And looking at the other markets, it will be useful for us to keep an eye on this, but we're a little bit away from these lows, so really we can focus on some other markets, certainly probably for over the course of this trading session, so we can come back to this one. So we'll put the pound pairs just at the bottom here. So we'll put the pound yen. I suppose some of the benefits of trading with MetaTrader 4 is that you're trading with quite an intuitive piece of software that allows you to just navigate and look at the charts that you're interested in. So we'll have a look at the two pound pairs just on the bottom left hand corner, probably switch between the two, and finally we'll put up our Aussie dollar trade, or the potential for an Aussie dollar trade. We do have to wait and see whether that's going to be the case or not, and we'll put these levels in here. Okay, so so for all intents and purposes, we can look at the Aussie dollar top left hand corner, pound dollar bottom left. We'll have a look at we're currently experiencing like a strong structural failure to the downside as we speak in the UK oil market. We're currently below the 97.05. We've got to break below that level on a 15-minute time frame. We've got plenty scope to the downside in this trade. Okay, definitely one to watch. Let's see if we get a pullback to the 7,900 level. We'll definitely have a really strong look at this market and see if we get a bit of a pullback opportunity on this trade. Okay. So as we look at this market, we can wait for a structure to be created. I'll wait for a pullback to the 7,900, something like that. So we're getting this little bit of a pullback now. So it's not always necessary to just get in on the first flush to the downside. There's certainly plenty of opportunities to often get into these moves, even if you get a structure created at a sort of a lower price point as well. So worth considering. So we are now at that level, so I'm going to suggest getting in and just selling UK oil at this particular sort of price here. with the expectation for it to just tick lower, and we can. So we've effectively got a 24 pip stop loss in this market. We are currently below the 7,500 level, so 7,900, which is where we're currently at. So really, it's just the potential for so if we do get a pullback. We might sort of even benefit from this ascending level. However, this is a kind of a triple top trade. So the nature of the trade is kind of based on a bigger time frame. So we've got this bit of price action here, and as you can see, many opportunities around this level, you get quite a strong impulse move to the downside. And we're looking at this price action as well just a few days ago. And you can see the strong rejection from these levels. So let's see if we get a bit of selling coming in today. We've got a nice little move to the downside potentially in this market. So it's worth getting into, but we do want to be quite disciplined with our approach with this trade. And I suppose this level of exposure is certainly something that we're relatively comfortable with. It's slightly less than 2% of our capital, so it's a 2% trade. We're comfortable with that level of exposure, and with the potential for this market to see a nice strong move to the downside. So hopefully we'll get a nice move in the UK oil market, and it's retracing a bit of yesterday's very bullish price action. And you often get big range days like this, and you get a significant little pullback. So there's a couple of things that might work in our favor as far as the UK oil market is concerned. We'll look at it on the 5-minute chart. We'd expect this market to roll over below the 7,900 if this market is to continue pushing lower. That's the key. Okay, we're seeing a bit of strength come back in to the Aussie dollar and the pound dollar. Just before I do, we'll just have a quick look at this market here. So we are now looking like we're breaking above that level as we look at this market in here. So this could be an opportunity for us to get in at this level. So we're getting a little bit of a pullback. So we've had a little bit of a move. Clearly, as we look at this market, we're seeing the impulse to the upside. So we're looking to go with the trend again. This is the level that we could be looking to get into. So it's come back to a level of support. So so let's get into this market. So we do have a the spread, obviously, which allows us to get in at this level up here. And if we take note of this low in here and manage and just monitor the spread. So we're talking about a 2-point spread on this market. So we're looking at the 13. So this is the range of this particular trade. So we're looking at effectively a 100 pip move, or as far as points are concerned, we're looking at effectively a 10 point move or a 100 pip move to the ups. In terms of risk exposure. So we're going to get into this trade, see if we can take it to the upside. It does represent, again, sort of going with the trade, and if we get this move above that level, we're likely to see a little bit of an impulsive move, pushing prices higher. So we're currently in this market as well. So we'll continue to monitor these markets and see if we get the follow through. We're getting a pullback as things stand on the UK oil. Currently above that $79 level. So we'll leave those just for a few seconds. Let's go and have a look through some of our other potential trades. A bit of bullish price action coming in, so we're not really interested in buying. We'd like to see this market flush lower. Same situation, I'm sure, for the New Zealand. We're just rejecting these lows now, aren't we? So a little bit of a bounce back off the 6,500. So again, so this is the pound dollar now. We are creeping closer to this 30-50 level. Now what we have tomorrow is some significant news events. Let me show you what's happening in tomorrow. Let me firstly, so we will look at this market again above the 30-50 level. We're not too far away from it. But this is just pretty choppy price action. So let's see if we get some continuation today or not. And the final market we were just looking at in terms of an opportunity. So now we're currently trading above this level. So the pound is looking less like an opportunity. So is the Aussie dollar and the New Zealand dollar. Unless we get a break above these highs again, which is potentially quite possible. So we'll keep an eye on it on a daily time frame on both of these dollar pairs. There's not many other really significant moves in any markets just yet. So the Nasdaq is pushing higher and the UK oil is just pulling back off these lows. So it'd be nice to have some tradable opportunities today. Do feel free to use your chat box if you do have any questions about our decision making, or why we get into trades, why do we get in at the price that we enter these markets, anything around sort of the education or the learning behind these trades. We've got such a strong focus on risk management. I suppose the psychology of taking a couple of losing trades like we saw yesterday is something that's really quite important. And yesterday was a case in point where you've got really strong explosive price action where you're getting into markets. Let's have a look at it on the minute time frame, and I'll just show you what I'm talking about with regards to the pound dollar. If we go right the way back to yesterday's price action, and you'll see the explosive move kick into your screen now very shortly. So let's see what see, this is all effective sideways moving price action. So we initially this is the price action that we were looking to get in at this market in and around these kind of levels, and as you can see, we were kind of in a bit of a sideways spin. There was lots of support coming in at these prices, the 30-50 level. So what becomes resistance on the way up, preventing prices from pushing higher, becomes support on the way down. So as these markets come back, the markets really respected the 30-50 level, and we kind of like to see that in our approach. And then we get the explosive move, and we were in and around this sort of price here. The 30.53 level was our entry price, and then 2-3 minutes later we got a really strong explosive move to the upside. There was no news related event from what we could understand. It was about 20 past 8 in the morning. We'd only just got into the trade, so we were in a lot of profit very, very quickly. But then look what happened. We started to see this price just slowly roll over to the downside, and we were, as far as the pound dollar is concerned, we were effectively breaking even. I think we had a 2 pip exposure in this market. And as this market attempted to make another high, it got another flush to the downside. And this was effectively moving from 30.70 level down to 29. The low is 29.88. So effectively, we had an 80-85 pip devaluation in 2 minutes. So again, no significant reason for that. And then we bounced off those lows and then drifted sideways before edging closer to the downside. Now, a floor has been clearly defined around the 29.80 level, just in around this level in here. This is where the market has really failed to continue lower. And we've started seeing prices just edge to the upside again. And that's where we kind of find ourselves at a few flushes lower. But ultimately this price is drifting higher as we speak. So interesting sort of devaluation, constantly driving these prices a little bit lower, and then we get the turnaround move, the structural failure to the upside, and we get a nice explosive moves higher. So even this price action here, the big explosive move from 30.08 up to the 35 level, it's just a lot of volatility in a short period of time, and then the potential for a structural failure to the downside as well in the pound dollar. So we're seeing a number of these markets are giving us mixed signals, and that's what we're conscious of right now. And again, you can see it in the daily time frame. So when you switch to the daily time frame, you can see the indecision in yesterday's trading just in this one candlestick here. So effectively a doji candlestick, which actually effectively means indecision, with a slight sort of bullish spinning top, but nothing of any significance. And today we're not really getting any follow through in either direction. So the 30-50 is not too far away, which is the only reason why we're interested in this, to see if we get a move up to that level as price market. So let's see where that pullback ends. We're not interested in obviously changing our stop loss or changing our mind regarding our exposure to risk. It's a trade where we accept the risk when we get into these trades from a psychological perspective, and want to get into these trades for the right reasons, but knowing that all of these markets pull back, and that's part and parcel of trading. So let's see how these moves pan out. So let's go into the UK oil. So we're getting the impulse to the upside with the dollar. We're just experiencing a significant pullback. But let's go in on the minute time frame. So if this market rolls over below the 79.05 level, that's actually a structural failure to the downside. So that would be in our favor if we stop squeezing higher. So we want to see this market just roll over from here below the 79.05, and then it's likely to pick up a bit of pace to the downside. So as these trades are just unfolding, not an awful lot going on elsewhere. I'm just conscious of the time, so we'll be switching over to the live trade room now very shortly. But we have the euro dollar sort of bouncing off its lows. So a bit of weakness creeping in so really just choppy market conditions. That kind of sums things up. Quite nicely. A bit of strength coming in against the Swiss, so we're getting the CAD selling off against the dollar, so we're not really getting a kind of a coherent picture. So the euro pound just hanging around these lows down here, so we really need these markets to start kind of moving well, in either direction. We can make decisions off the back of these markets moving in either direction, but as things currently stand, even the gold market is retracing off its lows right now as well. So US oil. Right, okay, so we did get that pullback off that low. This might be one of these trades, and if I just make a note of these highs just in here, and also let's take a note of the low. So this might be one of these situations where we still get this market sort of continuing to the downside. We've obviously just had a little peak to the upside, so the 79.19 is the high, And if we do get a break below the 78.92, it still might represent a good opportunity to sell this market to the downside. So our analysis is fine. It's kind of, I suppose you could actually call this a little bit of a head and shoulders, which is very much, there's your head and there's your other shoulder, which is very much kind of symmetrical. So we actually had that going for this trade as well to the downside. So the analysis in itself is not a major problem. Obviously we weren't willing to tolerate any more of a pullback than what we've currently experienced. So if this does pull back a little bit higher, then we just need to be sort of patient and wait and see if we get into this opportunity again around the 78.92 level. And then it will depend, of course, in terms of where this high actually ends. So we just don't want this rolling over and breaking above the 79.34. So we wanted to get into it to the downside with our risk under control, drawing a line in the sand and saying if this market pulls back to that level, then of course we will get out of this trade for now. But it may be one of these trades that we will be looking to get back into. It does look and feel like we might get this little market rolling over to the downside, and plenty scope to the downside as well. So we'll continue to look at the UK oil market. Gold just pulling back off its lows. US oil, it could really turn quite bullish at any second, and obviously that would be a concern for this market as well. So we are in profit on our Nasdaq trade. So we know we're going to experience a pullback at some point. So we are seeing a little bit of a move on that one. Again, there's plenty of scope to the upside, so we'll see how we get on with that trade. UK oil potentially looking like it's going to squeeze lower, but we really want to see if this market can break below the 78.92. If that's the case, there's plenty of movement to the downside. But this market is just sort of dealing with its pullback right now, so let's see how this plays out. Okay, and unfortunately on the currency front, not really getting great opportunities to get into these trades, to be fair. So potentially above the 30.50 level, but we're a little bit off that, with a good 20 pips or so. So, okay, we're going to actually switch across to the live trade room, guys. We're experiencing with these, we're obviously trading within these market conditions right now. So definitely some challenging trading conditions for us, for sure. But once these markets start to open up and start to become a little bit free moving with a little bit more follow through, which you would normally expect, then it can give us some fantastic opportunities. But we're still in the US oil market to the up, the Nasdaq market to the upside again, with plenty potential upside in this market. So a nice bullish candlestick off the back of some indecision for a couple of days. So we're very likely to see a nice strong move to the upside if this market follows through, of course, which we hope it will. So far so good on that trade. And we'll be looking to trade the structure to the upside. So we'll see how we get on. And the UK oil looks like it's wanting to squeeze lower once more on a 5-minute time frame. So on that note, guys, thank you very much for joining us. We're going to switch over to the live trade room. So please do take a brief moment to read the description below. And if you would like to join us, we do have over 76 live trading webinars every month. So hopefully you'll find it very interesting learning curve, and of course we do keep the cost absolute minimum, so there is only a fee of If you do decide to join us, there's a 14-day free trial currently available, and the fee is only $9.99 if you do want to join us on a more permanent basis. So hopefully you will find that a little bit of a no-brainer for you. And please do like this video and subscribe to the channel if you possibly can. You'll be notified as well when we go live, so hopefully you can join us again. And you can also connect with us through our Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen. So thank you very much for joining us. We're going to switch over to the live trade room now, so we'll continue the rest of this trading session there. So from everyone here at the live trade room, take care, and we'll speak to you soon. Bye for now.